fascinating about this tariff threat this time around is that it's not for trade reasons or economic reasons. It's for geographical reasons, for the ability to actually seize a country, which is sort of strange to think about.
Play with fire often enough, at a certain point, you're going to get burned. And as much as the president will say that he doesn't watch the stock market, I guarantee that he knows the S&P was down 2% today, one of the biggest one-day moves we've seen in quite some time. So there's a very good chance that some of this rhetoric gets ratcheted back. But your point is well taken. But the most concerning thing for me today, forgetting about the stock market, was the fact that 10-year yields are now basically 4.3% on the back of a dollar that's seemingly starting to weaken again, which is historically something you see in like developing economies. This is not a developing economy. So a weaker dollar, weaker bond market is problematic.
Well, you still, I mean, I call this the emerging market trade, the day when your currency, your stock market, and your bond market sell off. This is what you see when there are political crises in emerging markets. I mean, we have seen this, and we saw this in April. And you combine that with, and which is the tail and which is the dog, or which is, one which is leading the other. But the move in JGB yields, as we've talked about, I mean, this is on top of also Takaichi with policy that is very concerning for credit investors, for people that are worried about sovereignty. And this was a Sell America day. And whether you're worried about the Danish pension fund or not, the fact that they were able to get out there, we're selling treasuries, not based upon what's going on in Greenland, but in fact, we're worried about the country's finances. I think global bond yields, and I mean sovereign bond yields moving higher, is a risk that equity markets have not had to encounter in a long time, because in April it was the U.S. market. JGB yields were under control, even though, we've been talking about that for a while. So today was a day when you combined what's been simmering in the pot with U.S. headlines, and it was a Sell America day.
So I agree with both of them. I thought the bond move was particularly interesting. A couple things I thought. It was somewhat reminiscent of Liberation Day, but we've been through one Liberation Day, and we saw that it was just, that was within a few days, that was the peak bottom.
Right.
And so, I think people are more sort of tempered now. There was an interesting interview Sarah did with Secretary Lutnick, where he seemed to say, the trade deal is as it is. It's not changing. He sort of made it sound like we're not breaking up. We're just in a fight.
Right.
That's how it sounded to me. The other thing that I found really interesting was the lack of move in the VIX. Right. We got nowhere remotely close to a panic territory at all. So maybe that's coming.
You got a couple days.
Maybe, yeah. No, it absolutely could come. I bought a tiny bit of stock today. I bought Amazon, traded below 230. I thought, all right, down $9. I wanted to be bigger anyway. Other than that, I did nothing.
Yeah, to your point about, the kind of post-April period when we had, that tariff situation, and, investors got okay, I think, to some degree about what was going to be out there, what was going to be pulled back or so. But it really did, take a few months to get a lot of clarity yet. And so when you think about this sort of situation, we do have the cumulative nature of these tariffs. We do have, a situation where if we have that level of uncertainty going forward, you might have a lot of companies kind of pull back on some of those plans for 2026, whether it's CapEx, whether it's hiring, that sort of thing. And especially when you think about just how, volatile, I guess, if you just look over the last couple of weeks or so, a lot of policy, not just on foreign policy, but just think of the banks and how they traded after last week's earnings with that threat of, a cap on credit card rates. And if you look at JP Morgan, for instance, it really hasn't been able to get out of its own way since it reported. And it reported a quarter and gave guidance and had commentary that we all sat around saying that looked pretty good, right? And so you're seeing some of the money center banks really got hit hard towards the end of the day. So if you think about where we are, if rates are going to go higher, if uncertainty about the economy here, but also the global economy is going to kind of get ratcheted up, then at some point, if you're a strategist or you're an analyst covering a sector, you're probably going to get a bit more cautious on what you expect to happen in 2026. So again, this is one day. One day does not make a trend. We did have, a 6% or so sell-off that came, I think, in November, and then where we were a few weeks later, we were just kind of pressing against new all-time highs.